My portfolio was only up about $6,000 in October. It was a relaxed month, which I think we'll appreciate in hindsight after the election. But October wasn't all that boring for my portfolio. I made the biggest core change since buying QQQM earlier this year. In this video, I'll share all the details about the portfolio, and I'll let you know what's on my mind moving forward. We'll get into the portfolio's value by holding, new transactions, and there's a big one there, the dividends received, a HODL factory update to see if we're still beating that S&P 500, and any future strategy changes. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please TKO that like button, subscribe if you haven't already, and drop me a comment down below with anything that comes to mind. We had 2 new channel members this week. A huge thank you to DH and J Gentry. Welcome to the membership. I hope you enjoy your perks, comment priority, and you'll find your name down on the ticker below. A huge thank you to all of you channel members for making this possible. I really do appreciate you. All the spreadsheets you see on this channel are 100% free to anyone, so you don't have to be a channel member to use them. They're all available in the link below. There's a Google Sheets and an Excel version. But if you want to show that extra support by being a channel member, feel free to sign up. Everything's in the description below. And I also want to let you in on a big Black Friday promotion that they're having over at Seeking Alpha. As returning viewers know, I use Seeking Alpha for everything from screeners to stock and ETF research and my aggregation, and I really genuinely love it. They're not a sponsor, but I do have an affiliate link. They're having the big Black Friday sale from November 18th through December 3rd. If you use my link in that time frame, you'll save $90 off Seeking Alpha Premium for a full year. It's normally $300 and they're selling it for $209. And here's my main reason for sharing this, because I used to do this. Shout out to Gen X Dividend Investor. I used his link once. But this offer is available for previous paid subscribers. It's not new members only, and that's huge. You know what time it is. Let's grow. Big changes. I mentioned in the last portfolio update that I was interested in selling JEPQ in the near future. I won't go into the painful details in this one, but let me quickly summarize it in case you missed the last update. I think JEPQ is great for those who need high cash flow now, typically retirees. I still love it, and it will likely be a part of my full retirement strategy for my wife and me. But QQQM is a better holding within the modern 3-fund portfolio for total returns in the accumulation phase. I did hit the sell button when a primary tax lot became a long-term capital gain in October. It was to the tune of over $40,000. More to come on my full exit strategy and why I had to do a special update for this video in the next section. Portfolio overview. Let's jump right into my portfolio. We're going to start out here on E-Trade, which is my main broker account and where I keep most of my investments. It has my wife and my taxable account, and it has all of my rolled over 401ks over the years, which are now in a rollover IRA. So this is all brokerage accounts. About half and half is old 401ks and taxable. Now, if you're a regular viewer of these videos, you'll immediately notice that I have a lot more SCHD, not just because of the split. It went to 13,500, but this is a little bit of a November spoiler. But just yesterday, I sold an extra chunk of JEPQ and turned it into SCHD. And again, we won't see it on the transactions for October because it was technically in November. This is Tuesday, close of market. You can see it was pretty green today, and my total knee trade got up well over $1 million. But I had to make a special update for my normal Friday one to reflect the changes because I didn't want Seeking Alpha being so different from E-Trade. And we'll quickly go over the positions. So SCHD, we now have 14,200 shares. And it's at a now split adjusted $24.50 per share. You can see it's up 55,000 total, and it's worth almost $203,000. And then my VGT hasn't changed in a while, 500 shares, 246 cost. It's up $174,000, and it's worth $297K. And my money market, I bolstered back up to the 10%, well, cash, this plus a few other things, and we'll get more into that in a bit. QQQM has been untouched for quite a while. 432 of these shares are mine, 4 are my nephew's, and we'll get into that in Seeking Alpha. But you can see it's up 5,300, not quite as much, but it's a little newer position, and it's at 88.3K. JEPQ is all the way down to 924. Now I sold, I believe it was 808 in October, and that'll be reflected in this update. And what happened was just yesterday, a limit order hit to where I was actually able to sell newer JEPQ at a loss. So it was good for the taxes. Remember, you always want to sell long-term capital gains and any long or short-term losses when you're exiting a position for tax purposes. We don't want those short-term capital gains. That hurts our taxes. This used to be, I think it was 2,100. Was that the normal number? And I went down by 808, and it went down by an additional 368 shares just yesterday. And so it's at a measly $50,700. Oh, I miss you already, JEPQ. No changes in IBIT. 1,050 shares. It's worth 41.4. It's been doing pretty well lately. Bitcoin's on fire. And then these bottom two are my nephew's positions. And that's it for E-Trade. I'm going to jump into the fun one, M1 Finance, to check out the HODL Factory next. All right, here we are, the HODL Factory. And you can see here that I have 17,626 in this bad boy. And I did put an additional contribution into this thing in October, and we'll cover that in the new transactions. And for the returning viewers, you probably are noticing this thing's getting up there pretty quickly, all things considered. And right now I have it set to year-to-date performance. And for anyone new, so the HODL Factory is 25 individual companies that I hold, and my goal is to beat the market, which I use VOO as the barometer. And this is a dollar-weighted return, but for me it's also time-weighted because I've had the same pies and I've contributed new dollars evenly each time that money's gone in. So we have a proper money and time-weighted return to see how my good buddy Hutch and I compare to the market over many years. And so year-to-date is what it's set on. And you can see that the HODL Factory is up 31.61% year-to-date to the market's 20.42. Not bad, I'll take it. And then 1 year is about the same. We'll just go all here. The inception date for the HODL Factory is 4/20/2023, and you can see that its total gain is 69%, very nice, to the market's 44%. So we have done a pretty good job, but it's still very early, so I'm not gonna get too excited. Now in these videos, I don't go into the individual positions, but you can check the description in the link below, and there's a spreadsheet out there that I share with everyone for free called the HODL Stats. I think it's 9-HODL Stats, and that has all the holdings, the average cost, the results, the weighted dividend CAGR, all kinds of juicy, cool stats that you'll probably like to see. So get out there and check it out if you want. It's in Google Sheets and it's in Excel. Now I'm out at Seeking Alpha where I do all of my aggregation for all accounts that we have, and I'll get a little more into that. But I am blown away at the $16,000 gains today. Geez, I should have waited a day to do this video. No, I'm totally kidding. The only reason I did a special update was because of that whole JEPQ move, and we'll get more into that. But E-Trade, we won't go too deep into. We just talked about it, but you can see, the same amount of shares. Here's all my stuff. So you can see the low amount of JEPQ after the special Monday update. It hurts, but it is what it is. And here's all the values again. So I'm just gonna close this guy, and these will be a little higher than the spreadsheet we're about to see, which is from yesterday, just for an FYI. We have my wife's 401k, which I use VOO to track. It's an S&P 500 closed-ended fund, but I have it tracked to the dollar. I have a weird little system for doing it. And you can see that we have $415,000 of the S&P 500. And for her HSA, VUG, we have $33,336. Here's the HODL Factory. We don't really need to get into that. There's the value and everything. Same stuff we saw in M1. And again, I don't cover the details in these high-level updates. And then checking and other is just what we pay bills out of. My company has a checking, etc. So, it's almost 10,000 even. But there's that. So now let's see what this all really looks like. We're out on the portfolio tracker, and here's where I put in all of my positions. I do this once per week. It takes about 3 minutes. I just use Seeking Alpha to plug them in here. And again, this spreadsheet's out there for anyone that wants to track their own portfolio. I find it to be fun, but I'm also really nerdy. But once I put these in, it gives me my total portfolio value. And that's the number you likely saw in the title right here, 1.475 million. And then the rest of these tabs will auto-populate for the most part. But we're going to go to the snapshots tab here. And I just wanted to show, so normally you can see I update this every Friday. Here was the official update last month. It's usually the first one of the new month is the one I use. So like this was September's update. This would be, well, this should have been, but after my big change, this would be November's update. You can see there's 3 days between this and all these are a perfect week between them. I track every Friday and I have for years. It's kind of fun because you see we're here, we've hit 1.5 million. If you go back not that long ago, you know, we first hit 1 million in 2022. So it's been a fun journey. All the highlighted ones are all-time highs, but if you use this out there, like the spreadsheet's out there for you to use if you'd like, it's just kind of fun to look back over time to see how the thing grows when you just stay the course. But anyway, this one is not on my official copy that's out there. This is explicitly for this video. Moving forward, it's just going to be Friday, and then this one will become the 8th. Had to do it with that big move that I did. And one nice thing about the spreadsheet is it gives us our target allocation. So these are pivot tables that automatically update. And you can see by holding what percentage it is of your portfolio. And then I also have it by category because, for example, VGT, QQQM, and VUG are all growth. So growth rolls up to see the growth category of the modern 3-fund portfolio. And oh, you can see it's pretty darn close to the S&P 500 right now. Value, which is SCHD, finally caught up when I sold out some JEPQ, which I consider cash flow, and put it into SCHD. So you see these are all almost at their desired third. Cash I like at 10. Looks like I need a little more cash, but I've been working on that. And that'll probably come from JEPQ when I get out from under the rest of it, which is going to be very soon. It turns a year old pretty soon for those long-term capital gains. And then crypto is all the IBIT and stocks is the HODL factory. Sometimes I forget to go over this, but my goal is to have these categories: growth, S&P 500, which is my cornerstone, and SCHD, which is my value. I like to have these even to each other. This is my buying guide. So if my cash is at 10% or higher, I deploy the money into the holdings. And right now it would go to SCHD because I buy whatever is the lowest between these guys. That's how I've always done it. And I like that balance of target allocations. And then cash flow is JEPQ. This will go away soon. I had this because I couldn't pay the bills when I quit my 6-figure job to start this channel, but we're getting by now, my wife and I. And crypto and stocks, I don't really consider in my buying guide. I just put consistent money into my stocks, 100 a week. And I don't care what percentage it is for now. Until I prove I can beat the market for a while, I'm not going to ramp it up. And then crypto, I've gone back and forth on this, I have to admit. Sometimes I want it anywhere from 2 to 4%. So I'd buy more if it got under 2 and I'd sell if it got above 4. And at other times, like recently, I wanted it 3 to 5%, but clearly I haven't acted on that yet. So it's a little random right now, but never, ever, ever above 5% and never below 2%. But really my balancing is here. And when my cash is over 10%, these guys get fed. And then just for a zoom out value perspective, you can see that in 2022, we were way down and dropping and dropping. You guys remember how bad that year was. But then in 2023, we began to recover from that. And in 2024, it's just been juicy. So, you know, is a pullback coming? Maybe, but just stay the course and don't try to time it because we are our own worst enemies. And this video is all about October. And as you can see, 1,491,000 average update. That's the average value for the weekly updates, was an all-time high. It looks like it beat out the 1.433. So all things considered, even though it dipped a little at the end, October was a pretty solid month. And then I like to show this tab just in case you guys decide to use this spreadsheet or Google Doc. But on this one, you can put in your assumed growth. I use 8%, your birthday. And then this is a formula that pulls from the other tabs. This is a formula that pulls from whatever this is what you put in per month. And then it automatically runs the scenarios of what your estimated balance will be based on this growth scenario. So instead of using those online calculators, this is way more dynamic. You can switch this on the fly. You know, we're gonna do better. We're gonna do 10%, and you can see the numbers go up. So I leave it at 8, and I make 2 million and 3 million in bold, both for different reasons. And I plan to spill the beans of that secret in future videos. Time to find out where the money ended up after those big moves. Portfolio contributions. Here's a quick rundown of the contributions that are on autopilot each and every month. We max out my wife's 401k and her HSA with her company, and the company gives us a lot of help in that. And then I send $100 each week over to the HODL Factory in M1 Finance, and that's coming from my YouTube money. Let's go to my screen now to see all the transactions that have me clicking buttons. So I usually cover my buys each week, and it's on a pivot table. I need to fix this. 10's up here by the 1. Can't stand that. I could fix that on the data tab, but I was a little lazy. But I have just October selected. And down here is a special little note because I usually don't sell stuff, frankly. But just to show and reflect what happened, JEPQ, I sold 808 shares on 10/23 at $55.26 per share. And that was good for $44,648, which all went to the money market, I think. So that's what got cash back up to 10%. I had been getting a little greedy with my JEPQ cash. But I had a little change of heart there. Ultimately, I went to what I've always done because I am very confident in using the target allocations and starting with cash at 10%, as I've explained many times on this channel, why that works. Kind of auto buy that relative dip because we're not quite as smart as Warren Buffett. So I let the math do the timing for me. And then another one that's new since even putting this together, and this is the one from yesterday. So it's 11/5 on Tuesday, market close right now. On 11/4, I actually sold an unplanned 368 shares more. And so that'll be officially, it'll be in the November update. But just to prep you, I sold that for about $20,000. And that cash did get deployed to SCHD, which again is not reflected here. It is on the November update. So I'm giving a little spoiler alert, but this was unplanned spur of the moment because that tax lot hit a loss and it triggered that sell, which is a good thing. So getting back on track here for my new transactions on the buys, which is usually all we have, I had 4 buys to the HODL Factory for the normal $100 per week. I also had a $75 referral. So thank you to whoever that was this month out there that I got to the HODL Factory. And I alluded to it earlier, I dropped a special $1,000 contribution just sort of at random into the HODL as well. I don't do that very often. So that's why this is a weird number. Normally this would say 400, but I got the 1,000 extra and then the 75 referral. And then on JEPQ, I actually did buy. It's kind of funny. This is on October 1st. I had purchased 25 shares, my last purchase, at an average cost of $53.82. So these ones won't be sold unless they're at a loss, kind of like the ones that sold the 368. Planning on selling these after they're a year old unless we capture a loss on them, which is pretty likely with this higher price. And SCHD, I had 165 shares, mainly from reinvested dividends, if I'm not mistaken, and maybe just some other random buys. But this is not this one. Again, this went to money market, and the more recent 20,000 went to HD in November. But my average cost split adjusted, I did all that math on the spreadsheet, so everything split adjusted now, was $28.11 for SCHD. And that was good for a total of $7,500. Now it's time for the fun part that funds many of these new transactions. Dividends received. This section will no longer be as much fun without our hero, JEPQ. But it's not gone yet, and we did have another big win over last year. Let's check it out. Here's our dividend table, and it's all via these slicers. So right now I have everything selected, so we see it all since January 2023. And if you scroll down here to October, you can see last October we had $2,336 of dividends, and this year $32.95. And a lot of that's JEPQ because we did hit the dividend in October. And I'd just like to drop it down to show some details here. So JEPE, I had a little last year. Didn't have it this year, haven't for a while. JEPQ, you can see I was just building it last year, had a lot this year, and that's a big difference. Our M1 mix over doubled, which I like to see. We've just ramped that up. It was pretty new last year though. Premium savings for uninvested cash basically in E-Trade. VGT, you can see paid more last year. Now it has increased its dividends very nicely actually, but I had sold a chunk of VGT when I decided to add QQQM earlier in the year. The money market last year 63, this year 386, but I mention this all the time. I was in a treasury ladder last year, so I recognize a lot of it in 2022 technically. So this isn't quite apples to apples, but hey, it's making us look good, so I'll take it. And the S&P 500, this is from my wife's 401k. You can see they had a nice little increase, and that's because she had more shares we buy every week, and the S&P 500 has also increased its per share dividend. So not too bad here. A nice little, 26% increase or so. And if you add it all up, you win by almost $1,000 in that month. And if you add it all up, you can see that we're at 27.9K this year, and we've already surpassed last year. You can see that JEPQ, we started to ramp up by last December, and now we're ramping it down. So hopefully we still get a nice W in December, even with that change. On to a less glamorous topic for October. Portfolio performance. I don't think many investors saw overwhelmingly positive results in October. I will say that I did outperform the competition, which is VU, the S&P 500, and VT, the world market, but none of us set the world on fire. Let's hop over to my screen to see how we did over a variety of timelines. We're out on Portfolio Visualizer, my favorite site to do a back test, even though it's a little spindy these days. So on this test, I have my mix in here as Portfolio 1, VU, the S&P 500 is 2, and VT, the world market, is 3. And you can see some of their default stuff is in the way here, but here's SCHD, 33%, VU 33%, and my growth, QQQ and VGT, is 34%, so a third each. Portfolio 2 is the S&P 500, which is VU, and you can see that there, and then VT up here. It's kind of hard to see these, but that's what they are. Okay, and then for the investing settings here, I have from 2012 through 2024. Now, I actually started in 2010, but SCHD doesn't go back that far on this back test. So I put in 2012 through 2024. Year to date, yes, that's counting 2024 so far. I just put an initial amount and a monthly contribution of 80K and 2,050. Now I put these numbers in to roughly mimic where I am, because this isn't perfect. I probably put in more or less at times and probably had less to start, maybe more, I can't remember. But what this does for us is it gets us to the end result so we can see how the different portfolios compared against one another. It's contributing a fixed amount monthly, as you can see. Rebalance annually, reinvest dividends, of course, display income, yes, and then let's hit analyze. And again, you can see it only gives us from January 1st, 2012 through November 4th, that's yesterday, 2024. And we're gonna drop right down to the fun part, performance summary. So this is a high level view, of course. We started with 80,000, we put in that 2,050 a month, and you can see my mix ends about where we are. And if that same system was put into VU all along, we'd be at 1.286 million, so about 200K shy of what I'm actually at. And if we put it into the Bogleheads VT, the world market, it's like 60% VTI, 40% non-US stuff, all in weighted proportion. They'd be at 912%. It's never been good. It goes on runs. I've made videos about why I don't do the international thing, and you can check those out if you want. But even though it wins for 3 to 7 years at a time sometimes, when you zoom way out, and I'm talking way out, I have 40 and 50 year history videos that show US is just a better market. I agree with Buffett. Most people should just invest in VU. And we won't go over all these returns because we'll do that a little down below. But I always like to point out the best year is higher with mine, and the worst year is better with mine as well. So better ceiling, better floor. And the risk adjusted return, like Sharp and Sortino, are higher and higher. So it's a good mix. I like to be quick with this one. My mix is the blue, VU is the green, and VT is the gray. But as you can see, and I like to mention this, especially with VU and my mix, they trend together. I'm looking at the top two bars here. It's not like one's gonna go up and one's gonna go down, because we're basically creating a customized VU with just, in my opinion, higher quality growth for half and higher quality value for half. So here's the annualized returns. And you can see in 2012, we came out of the gates with an L. VU actually outperformed the mix, as did VT. VT was the champion that year. But then every single year since we've won. We win bad years, and this one's close, but we won. And we win good years. Slightly higher ceiling, slightly higher floor. That's what I like to see. But I know, elephant in the room, leave me alone here. My mix is losing in 2024 to VU, 18.5% to 21.11. So we have some work to do, and it's getting late in the year. I think we might get an L, but that's okay. I'm gonna stay the course, at least for a while. And we're still beating that underperforming VT by quite a bit. And we'll quickly touch on the trailing returns. I won't even mention VT because it's just, I'll let you look if you want. It's really bad on all of them. But on the full timeline since 2012, 12 years and change, we have 16.16% to the market's 14.62. That's a big difference over time. Over the last decade, we're up nearly 15% to 13%. And over the last 5 years, we're up 17.1 to 15.2. Oh, and we took the lead on the 3-year. We had dropped it last month. I made a joke how I've made a terrible mistake because we were down 0.01%. But you can see we slightly passed the market by 0.3 now. And then the last year, we are losing. We covered that. And year to date, we're losing. And these aren't quite as updated, you can see, because this is year to date last month, whereas the one above shows so far this month as well, which isn't much, but you can see these numbers are slightly different for both compared to the chart. And that's just because this isn't counting November. You know, our portfolio income started a little lower, but it ramps up, and our dividend growth is so good with SCHD and VGT and QQQ. VU hurts us a little, being the same as the green bar, but you can see so far in 2024, we've poured in 19,000 of dividend income in this scenario compared to the market's 12,000 and VT's 11,000. Okay, and then I won't harp on this section. This is just some high-level cool stats. I like to be quick here because I know these are long videos. You can see our trailing 12-month yield is 1.78 with our mix, and our PE ratio, that's an important one to see what kind of value we're getting. It's getting a little high at 27.01. And to compare that with the market VU, you have a much lower yield at 1.28% and a higher PE ratio, so it is a worse value at 27.49%. And then VT actually has the higher yield at 1.85, although ours has grown better, so it actually produces more income long-term, but just buying it right now, it's slightly higher. And it has a nicer PE ratio of 20.9. There's so much nerdy info I can show on these, but this is the last one I'll do. I won't make you sit through any more of this pain. The monthly return for the month in question, and that's October, you can see I pretty severely outperformed VT, and I slightly outperformed VU on the month. We're down 0.53% to the market being down nearly 1% and VT being down over 2%. And now within the portfolio, you can see the SCHD was positive 0.19, VU dragging us down, the actual competition, of course, at almost 1% down. And then our two growths were down a little less than the market. So SCHD was really what helped us pull through in October and get a slight win. It's time to wrap things up. Looking ahead, I don't have any other major portfolio updates outside of the JEPQ exit plan. I do want to reiterate the importance of staying poised during these turbulent times. There's a lot of garbage out there in the news and on YouTube during these high-stress times around an election. And that's a bit scary because there's a lot of garbage out there at all times, frankly. We build our solid systems to save us from ourselves when things get dicey. Don't fall for the news. Stay the course. Stick to your system. My mission here is to simply help you reach your version of financial freedom. We can win this simple game together. And check out one of these two videos if you want to continue down that path to financial freedom. Thanks for watching, and I will see you here in the next one. Peace.